Welcome to INVACT, your ultimate destination for demystifying the world of investments. AI has undoubtedly become the key to a new round of strategic layout for tech giants. However, the first quarter earnings report shows that although they all burn crazy money in the AI field, the current impact on the company's performance is completely different. First quarter results were also strong. The stock prices of Google's parent company Alphabet and Microsoft surged during after-hours trading. The former rose more than 15% to a record high after the market on Thursday, while the stock price of Facebook's parent company Meta was hit hard, falling by more than 10% overnight. The key to this difference is that, at this stage, AI investment has begun to bring huge benefits to Google and Microsoft, but it is more like a heavy burden for Meta's performance. At the conference call that just ended, Google and Microsoft both confirmed the positive effects of AI on performance. According to financial reports, Google's total revenue for the first quarter was $81.54 billion, an increase of 15% year-on-year, the fastest growth rate since the beginning of 2022. Google Cloud's revenue reached $9.6 billion in the first quarter, up 28% year-over-year. Chief Financial Officer Ruth Porat said this was due to growing contributions from AI. However, it will be more difficult to evaluate Google's investment and expenditure in the AI field in the future because of Google's organizational restructuring. Starting in the second quarter, the AI model development team, originally belonging to Google's service department, will migrate to DeepMind. In other words, starting in the second quarter, AI-related accounting processing will be transferred from Google to the Alphabet headquarters level. This will make it more difficult to evaluate Google's input and output in the AI field, as related expenses will be included in Alphabet as a whole, not just Google units. Driven by AI, Microsoft's key financial indicators and various businesses for the quarter comprehensively exceeded expectations. Among them, overall Microsoft Cloud revenue increased 23% year-over-year to $35.1 billion. Smart Cloud revenue increased 21% to $26.7 billion. Azure revenue accelerated quarter by quarter. It is worth mentioning that revenue from Azure and other cloud services increased by 31%, higher than market expectations by 28.6%. At Microsoft's earnings conference call, Morgan Stanley analyst Keith Weiss raised more detailed questions about Microsoft's investment in AI. He pointed out that Microsoft's capital expenditure will increase by more than 50% year-over-year to reach $50 billion. At the same time, there are rumors about spending $100 billion to build an AI supercomputer. He expressed concern about the huge investment in AI. CEO Satya Nadella responded that when it comes to training, Microsoft wants to be able to invest the necessary capital to basically train these large basic models and stay ahead in this field. Furthermore, the positive impact of the year of efficiency continues. Last year, against the backdrop of a severe macroeconomic situation, Meta made drastic layoffs and cost cuts and called 2023 the year of efficiency. Under this plan, Meta's financial performance for the whole year was greatly boosted. However, Meta's backlash in the first quarter of the year raised this year's expenditure budget drastically, which will inevitably cause a huge drag on the company's financial performance. Meta raised its capital expenditure forecast for this year from $30 billion to $37 billion to $35 billion to $40 billion in its first quarter earnings report, saying it was due to speeding up infrastructure investment to support the AI roadmap. Meta also expects capital spending to continue to rise next year. In the first quarter call that followed, Meta CEO Zuckerberg said he believes Meta should significantly increase investment over the next few years to build more advanced models and the world's largest AI service. He added that before we can generate significant revenue from these new products, these expenses must grow meaningfully. What scares investors the most is that Zuckerberg said that it may take a bit long to monetize AI. Building leading-edge AI will also be a larger task than any other experience we add to the app, which could take years. After Zuckerberg's statement, Meta's post-market decline widened to nearly 20% on Wednesday, then continued to plummet on Thursday, falling more than 10% at the close. Thank you for watching. If you found value in this video, don't forget to hit the like button, subscribe to our channel, and share it with your friends and family. Together, let's embark on a journey towards financial enlightenment.